Dun, dun, dun. And we're back, hopefully. A little bit of technical difficulties. My streaming software actually crashed. It locked up. My headset died. I changed my headset, went to click the properties to load up my other headset. The thing died. It locked up on me. Sorry about that. For those of you who are back, we'll give everybody a few seconds to no, your internet didn't die. We lost our feed because my uh, OBS software locked up on me. Oh well, that's a first. Never actually had to crash one during the day, but all right. So we'll give everybody a couple minutes here. Um, anyway, we'll wait, see if they come back. If they don't, sorry about that. Yes, we are getting people coming back now. They are. Live chat. We are back. It crashed on us. So anyway,
Code like following. They'll be back.
yeah, it is. Oh, anyway. Sorry about that. Good to see Rob over there, SoFlo over there on our lives, Gilly and Dave, and all the rest of you. Thank you for being back. We had technical difficulties and my software crashed, so I had to restart it. So anyway, um, I thank you for coming back. For those of you who have returned, we are here. Uh, I promised you the other day that we might have a special offer today. Well, we do have a special offer today, and it is 25% off any futures off the futures membership, no matter how you pay for it. If you pay it annually, you'll get 25% off the annual membership. If you pay it by 6 months, you will get off 25% off your first 6 month payment. The second 6 months will be at normal price. Same thing, quarterly and monthly, you would get 25% off your first. I need to change my properties here. Big level. Oh, talking about big level on the chart, not on my speaker. My speakers sound all right. I don't have to change property on it. My mic, I mean. All right. So what do? We try to educate you so that you can develop this skill. I think is what I was talking about that nobody can take away from you. So if you have any questions about trading futures, you can ask those in all your social media platforms chat box there. We'll try to do our best as time allows to answer your questions. If you are interested in getting those memberships, they are 25% off. You must use discount code MARK, MARK, at the checkout box. You'll see there's a place to put the discount code in there. Type in MARK, click apply, and you will see that it automatically deducts 25% off the price of the membership period that you selected, whether it's monthly, annually, semi annually, or even quarterly. So, anyway, if you have any questions, feel free to type them in your chat box. We did spend 2 hours before this live broadcast with our paid members answering their questions and deep diving into everything's futures. We had a lot of good questions. We talked about trading futures in general, what's all involved in it. It was a really good session. We had some people that joined us today that weren't here previously and took advantage of the opportunity to come in and say hi. Actually, Coach opened the doors to every paid American Dream Trading member if they wanted to come in here today and hang out for free. So they all got a free day to see and peek behind the curtain what goes on here with futures trading. And I believe a lot of them found that they may already have the skills to trade futures because they learned those skills by trading stocks and stock options, and that all of Coach's trading strategies, no matter whether it's scalping or the 2 minute EWO or swing trading, all of it applies 100% to trading futures. So that's the beauty of Coach's trading strategies. They're applicable to all investment vehicles. So you too can learn how to do this. If you're interested in furthering your education, head on over to AmericanDreamTrading.com and grab one of those paid memberships. We have the premium membership, which is our base membership. We also have the VIP, VIP Gold, crypto, and futures membership. The crypto and the futures memberships are standalone memberships that are not included in the VIP, VIP Gold membership packages. Okay, so what one of the some of the benefits of having a futures membership is we have over up to 20 hours minimum of training live in a Zoom room with our paid members each and every week. Every weekend they receive a newsletter which outlines the coming week's economic news releases on a day-to-day and hour-to-hour basis. They can look at that, study over, and see what important things are coming out in the following week. And that not only covers the United States, it covers all the major markets around the world because futures are traded around the world. It is important to know when these things come out so that hopefully you can take that information once you get the experience and the education and you can capitalize on that and making money. A case in point this morning at 10 a.m. Eastern time today, the Michigan, and I choke on that word Michigan because that's the team up north, and I don't like that team up north. Do I care if I offend that team up north? Not one bit. I don't even care that our moderator in here lives there presently. I still despise that team up north. But anyway, we won't go there.
It's a good thing I don't follow football.
Yeah, that's for another channel, right? We're here to talk about futures. But the Michigan Consumer Sentiment Report came out at 10 a.m. this morning. It was substantially lower, meaning people's views in their survey thought the economy was less than favorable. And as such, if we scroll back in a period of time here, I would say this candle's probably it. Oh golly, look what happened. If you let me scroll over here, expand this out, and so you can see it even better. Um, at 10 a.m. precisely, those numbers were released by the government, by the meat chicken state. Here it is, 10 a.m. right here on this candle, as you can see, right here, this candle. That went from there clear down to here instantly. So if you were in a trade to the upside and you didn't have a stop, you lost let's say we'll round it up, round it down, 60 tick value per contract. So if you weren't prepared and didn't know that news was coming out, for one contract, you would have lost $750. So if you had had to be in a 5 contract trade, you'd have lost $3,750 in this one candle in literal seconds. Probably about 10 seconds, actually, right? Now, did our members lose money in that trade? Absolutely not. No, they did not. Why? Because our members are educated to know better, to not be in a trade or have very tight stops every time there's key economic news comes out. And they receive that. Our VIP Gold members receive also the same newsletter with that information in it. And if you were watching Coaches Live today at 10 o'clock, you heard us talking about it and warning about it minutes. Well, we talked about it all morning, but you literally heard us reminding all of our paid members, and for those of you watching live, that that report was about to be released. And you can load up on a trade. I did so myself, and I was loaded up, and I made $750 on that pull. Now I didn't write the whole thing down, but I jumped out once in a matter of a few seconds. I made about $750 because of that news. I was prepped and ready to go. Okay. Um, so our members knew to tighten up their stops. Our members that weren't experienced knew not to be in a trade period because, as you can see, there was a knee-jerk reaction. It dropped like a rock, and then it recovered, went back to the upside, like there typically is with economic news releases. So when you get these things, if you are trading them, you have to get in and out of them to lock in your profits, or it'll go back on you. You can see this almost entirely retraced back to where it was at before it dropped, and then it continued. They blew off that report and the stock market went up anyway, right? So there's usually a knee-jerk reaction to any news, right? And it usually will go back. Not always, but usually. So our members were prepared ahead of time because they received as a benefit of their membership, they knew that was coming. And also as a paid member, they were warned about it as a reminder ahead of time. And that's how we capitalize. And we do that same thing with the futures market. We know when London is going to be releasing the Bank of England interest rates decisions whenever that happens, because it's at a specific time on a specific day of the week when they release that information. And if this happens to be that week or that day that happens, our members already know about that, and they can capitalize on anything that would cause that information in London to affect what we're trading. And it does, because futures are traded worldwide 23 hours a day. Miguel over there in YouTube live chat said, "What stock is this? This is not a stock. This is the futures. That is ES. That is the S&P 500 E-mini futures. So it would be equivalent to, if you're familiar with the stock end or stock option, would be the same thing as SPY. Matter of fact, the futures are like the parent, and the stock options are like the child of that. If you take this ES chart and take the SPY chart, these will overlay exactly the same price up and down movements. The charts are identical. The scaling is a little different, price scaling. Here they're in the 4 digits, where SPY's in the 3 digits. So it's like 560, here it's 5600. So this is the futures. So our members were aware. That was one of the benefits of membership. They were able to capitalize on that news. I capitalized on it myself, as did a lot of, even Coach capitalized at it also. So in addition to that, we also have our live Zoom training up to 20 hours a week. We also have within our Discord for our paid future members, we have a live futures chat where we can get in there literally 24 hours a day, but the market's only open 23. We can go in there and discuss our trades within that chat amongst with other members. Now, we are not in there saying buy gold and sell gold at any given time, but a member might say, hey, gold's going up, or hey, gold's going down. That's not an inducement to buy. What that tells the members, hey, go take a look at it, decide if you want to enter that trade or not. Maybe it's going one way and we all jump in it. We may very well, but we made those decisions as individuals. And then somebody will say, hey, oil's dropping, we'll run over there maybe, right? It's an opportunity to take a look. It's never an inducement to buy or sell. But we all can't look at everything at once. And I love trading gold, but you may not. You may be over there trading the ES, right? And so we do those little, if you want to call them call outs, it's not really a call out. It's just making you aware of what's going on around the place. Or a member may say, hey, I only have a level here. What do you have for the next level on your chart? And we'll call that, people can type that in. Hey, I have a level at 56.24 even, right? So we we help each other increase in our knowledge of all the things that are related to futures. Very valuable tool. And occasionally we'll even have a live Zoom call in the evening. For those of you who are on the social and you had your notification turned on, Coach surprised all of you. He got on there and traded futures himself live, starting at about 7 o'clock Eastern last night, and he traded clear up to 11 o'clock at night last night. So that was pretty cool too. So those things happen from time to time also. Um, so we have those different opportunities, and there's also educational videos and documents and everything also for our members to take advantage of. And we get to hang out together and learn from each other. So it's very well worth it, in my opinion. I personally told everybody today I will probably never ever trade a single stock or a stock option ever again. That is how much I love trading futures. I really do. I don't have to worry about the Greeks accelerating my losses when there's a giant pullback all of a sudden. I don't have to deal with any of that when I'm trading futures. It's just straight up and down. If it goes up a dollar, and then I make a dollar. If it goes down a dollar, I lose that dollar. If it goes back up that dollar, I get that dollar back. Kind of like trading stocks in that regard. It's not, but it is in the round effect. And on top of that, with your paid membership, you get Coach's Indicators, what you see on my screen here. This is Trading View. Okay. These Coach's Indicators are what you see on my screen. It has the cloud and it has the different indicators on here. It also has the EWO, which is part of Coach's 2-minute EWO trading strategy. And there's a volume bars and all these other things. So this looks like a lot on my chart. and it is. But once you understand what all this is telling you, you can, with literally in a matter of seconds, decide whether you want to enter a trade or not. You can decide whether you want to exit a trade. That comes through education, training, and experience. So I showed you that yesterday. Remember, I was just clicking through something. Do I want to enter this trade? Oh, do I want to enter gold right now? Yeah, I can. It's to the downside. All my indicators are in my rear view mirror. I got a break of the 9. Here's my hold. I want to see what this is going to do first. Now, I do have an Asian low here. Do I have any double? Look here. See, this is a strong. So I got a support level here I'm going to worry about. So I'm going to wait for a break and hold. I'm actually going to give it a little bit longer time because here I have a double bottom level of support. It may very well, if it happens to go that low, may bounce off that and go the other way, or it can blow right through it. But in that regard, I decided, you saw how fast I decided, do I want to enter that trade or not? And I did it based on coach's indicator. So I can load up ahead of time, say I want to go short, but I'm going to wait for a break and hold. Now, it may not even get all the way to that pure double bottom, because if I can see it, so can millions of others, right? And they may sell off before that and start buying and drive the price back up, which I can take advantage of that. But I'm going to sit here and wait. I'm going to have a short loaded up here and see if I want to trade this. Now, in all honesty, this may take forever because I already know through experience that the metals market do not have a high volume at this time of the day. So honestly, I would not trade this period in real life. I can sit here, but the volume is, it's still going to move, but the volume is low, that that it won't that it doesn't really tend to move all that much, right? So, but as you can see, this is a paper trading account, by the way. This is not real money. I never trade my real money account while I'm in training mode or sharing my screen with others because I'm distracted. But every time, as you can see, I entered this trade. Again, it doesn't matter that it's fake money. I automatically had a stop pre-programmed in. You never trade without a stop. So when I click to buy this, even though it was to the downside, you can see I'm losing money, but I am limited on how much money I can lose by my stop. And I can move this up and down, right? I can use this stop if I get into the profit, if this would happen to break up through here. It's got a big fight to be able to do it on lower volume. So I might be sitting here all day waiting for that to go green. I can use my stop to lock in profits. See, I'm up $100 right now, that quick, right? Um, or I can move my stop up here and I can lock in and guarantee my profit. Or I can leave it down here so that if it drops, whatever. Or I can click the button here and get out of the trade this way. So if I don't want to lose any more money, I can click that, or if I'm taking profit, when I click that button, it locks in my profits. But you always trade with a stop. It protects your downside, keeps you from wrecking your accounts. So if you guys have any questions over there in your social media, go ahead and type them in. Let me take a look at TikTok over here and see if any questions there. I'm looking at, well, right now I'm looking at gold, but I was looking at ES. The reason I'm looking at the indices is because that's where the volume's at this time of the day. It's also options Friday. People are going to want to get out of their positions, so you can expect more volatility. People will be selling and buying. They'll sell off and get out of their positions, and it can drop rapidly. And then people might get excited because now it's on sale down here, and they might want to buy in and get in at a lower price. Ben asks over there, what indicators you recommend? You don't have any? Well, what you see on my screen, now this is built into Coach's 2.0 indicator script, but essentially what you see on my screen is the 9 EMA, the 21 EMA, the 55 EMA, then I have the 200 MA, which is a long term, and I also have VWAP. VWAP is the number. If you don't have any other indicator on your chart, you should have VWAP on there. That's the one that's used the most worldwide by traders everywhere. It's a volume weighted average price indicator is what that's called. The 200 is a long-term average. 200, what it does is it takes 200 candles backwards and adds them all up, divides it, takes square root of. And by the way, happy Pi Day for those of you who know what that is, March 14th. And then it draws that trend line. Of course, the 9 EMA takes the last 9 candles in that time period on my chart, so that would represent the last 18 minutes, 9 candles, and it draws a trend line for that, and the 21 does the same thing, 55. So these are shorter term trends, and these two are your longer term, and this is a volume. It takes not only the price, but it also takes in the volume. In other words, this is a good average price point. So, and you make buying and selling decisions based at wherever these things are in relationship to your indicators. There's thousands of indicators you can use. You want to use a Fibonacci retracement while you're standing on your head looking at your monitor upside down, and you can make money doing it. By God, who am I to say you can't use a Fibonacci retracement? If you want to use the MACD, the Mac Daddy, and lay down sideways on your desk and look at your monitor sideways and you can make money doing that, who am I to say that you can't use that? However, Coach does have 33 years of experience, and he's used all those. He knows how they work inside and out. And over the years, he's kind of refined how he trades and what he puts on his screen. If you're ever watching live, he has very few things on his screen. He'll tell you himself that if you can only have one, it should be VWAP. But you don't see a lot of them on there. So he's kind of adopted to keep it simple, stupid principle, right? And trying to keep it to a minimum. Just get what you need, learn what they're telling you, and trade accordingly. And that's what you see on my screen. And he's developed this logarithm script that works only. It works only in TradingView, by the way. This is a TradingView script, which you get as your paid membership. You do have to have a subscription to TradingView, which is not associated with us. It's a independent charting software. But now I have this, I can make decisions to buy and sell based on what I see on my screen, and it works very well. Really helps me make decisions. So that's what those are. Can I draw the 21 to 55 and the 9 on my chart? Yep, you can. It's not some trade secret. But the way all these things are together, they're all in one place, and I can use them, and it's visually appealing. So again, I apologize for those of you who was with us earlier. I had a glitch on my software for trading. My headset died, and I went to switch it out and change my properties for the other headset and locked it up. I had to restart. So, all right. What about over there on
Hey,
YouTube?
Mark.
Yes, ma'am.
So we have somebody in a new person in the chat who is new to futures and would like you to explain how we short futures. They are used to doing um shares and some options, but would like some more clarification on the mechanics.
Okay. Well, if you know about stock options, you can do, if you think the price is going up like it is currently, you can do a call, right? I think the price is going up, I'm going to put in a call. If I think the price is coming down, I would put in a put. That's the lingo on trading stock options. So if you're familiar on calls and puts, calls are to the upside, puts are to the downside. It's the exact same thing mechanics over here. If you can trade a stock option, it's the same thing. It's the exact same mechanics, as a matter of fact, as buying a call or buying a put. All right. Over in futures, the lingo is just a little bit different. We call it going long when we think the price is going up, and we do a short when we think the price is going down. Okay. So I'm using TradingView here. I have my Webull account attached to this, so I can trade my Webull account through TradingView. So if I'm going to go long, in other words, if I'm going to do a call, if I think this is going to continue up, which it's coming up to a double top, so it's really not. It's going to come to a complete stop here in a minute, probably. There we go. I bought a call. I bought a long position. So you buy it. When I want to buy something because I think it's going to go green, I buy it. When I want to get out of it, I click the sell button and click sell, and it will sell my position. Or I can just come over here and close it out that way. Okay. So, and the inverse is also the same here. If I think the price is going down, you would, basically sell a put. You're borrowing it, you're selling it. So you would buy a put, but in this case, the lingo is you sell. So I would do the red, and as you can see, the broker already has here, and it's built into the software. It's red for down, right? We tend to think when things go down, that's bad. Red is bad, right? Because we only think people, I mean, if you talk to any of your friends or relatives, they hear the stock market went down today, they think everybody lost money. No, actually, we made more money when the stock market goes down. Okay. So if the price is, I think the price is dropping, I would sell it. I would do a short. So I would hit the sell button, right, with my pre-programmed stop loss. Now you see this says -1. That says I'm in the negative. That means that's a sell. That would be like a put in the stock option world. Okay. I'm going short on this, and I believe the price is going down. The only way I will make money on this trade is if this candle is red and it starts to drop, right? I lose money if the candle starts going back up, right? But I have a stop to limit my losses to the upside. So I can go, I'll probably go right here. That's a little tight. You got to give it room to breathe. You got to let it get away from you. So you see I'm up a whole 1250. Now I'm losing money, right? So now my short is going green. So now I'm losing money. It's just the inverse. If I buy a long and the price drops, I lose money. On a short, in other words, I think price is going down like it is now. Now I'm making money. So I make money when it goes down on a short, or in the stock option world, they put, right? It's the same mechanics. It's just the inverse. When I'm going down, my stop will be above where I bought it at, because how do I lose money when I am shorting it? Or if I'm into stock options, I'm doing a put. The only way I lose money if it goes above where I bought it, because I said I believe the price is going down. So if it goes above where I bought it, I lose money. So that's why your stop automatically is above. So I need to limit this if it turns green from climbing, right? So I set my stop. So if it suddenly shoots up there, it automatically closes it out. On the call, I say the price is going to go up. So as long as it continues to go up, my stop is down below, right? So see how that's automatically programmed in. Again, I'm losing money right now because what? The price is higher than what I bought in. I thought the price was going to go down. I made a bad decision, right? So that's why you need to limit your potential loss with a stop every time you enter a trade. If you don't have a stop, that is a sure path to destroying your account, right? You need to limit your losses. So on a short, I lose money if it goes up, right? As I am right now, right? You see I'm down 75. Again, this is paper money, so don't feel bad for me. I made lots of money this morning. So again, the same thing. If I want to buy, if I think the price is going up and I buy in, right? Bang, right there's my stop. How do I lose money on a long? How do I lose money on a call? Well, I make money if the price goes up, right? If I'm green, if the bar is green and it goes up, I make money. I lose money if it goes red and goes down lower, right? That's easier. That's easier for our brains to comprehend. If it's red, that's bad, right? But I still have a stop down here in case it does pull back on me severely, that it will cancel my and limit my downside. The other way, the inverse, you lose money on the upside. So that's why on a long, your call's below you. On a put, your your stop will be up here instead. So mechanics are the same as they are basically on stock options, or if you have a margin account and you can trade stocks, it's the same thing. It's just a futures contract. Mechanics are basically the same. You just need to know how to do that. A lot of people have issues. Well, I don't like trading to the downside. That don't seem right. I can't think that way. It's because it's an inverse. When you're in grade school and you get a bad grade, what color marker does the teacher use when you get an F? Red, big old red F, right? That's bad. Bad grade, you get a red. Well, it's the same way with candles. You get green and red. Green is good, red is bad. So to wrap our brains around that, yes, we can make money to the downside and it's a red candle, that's actually good if you're in a short, right? Or if you're in a stock option, it would be a put. And that's hard for our brains because we're so ingrained that green is good and red is bad. Well, red is good when you're on a short and it's going down. That's how you make money. So that's just something, a little mental thing that you have to overcome. I love making. Matter of fact, I think it's easier for me to make money when it's going down than when it's going up. But I make money both ways. We learn to make money when the market goes up. We make money when the market goes down by buying shorts or puts and stock options. And we can even make money when it goes sideways. When you get channel trading, you get these channels that it hangs out in. I could trade these channels. I can trade it, buy it down here when it goes up. When it retraces, I buy a short and play it down. And when it bounces back up, I go back into a call, play the call up and make profit up there. When it comes back up to the top of that channel and bounces off again, right? Because you buy calls on support, right? Or longs on support, and you buy puts on resistance or shorts on resistance, right? So I can sit here and trade this big old W or big old M, depending on what you're looking at, how you look at it. I can make money from here up to there when it pulls back, because I know generally at double tops it's going to pull back, and you can see it does, right? May not hit that line exactly every time, but that's what happened here, right? There's a support. It'll bounce off that on the downside. Here it did break through, but you can see here it respected it a little bit better. So I know just on that trading principle that I learned from Coach, double tops and double bottoms are fantastic trades. So I can channel trade even though this is really not going up or down, right? It's kind of hanging out in this zone of movement. Comes down here, enter the trade, write it up. When it gets up to the top there, the line of resistance, switch over and go short, make money when it goes down. When it pops back up, do the same thing, rinse and repeat, long, short, long, short. So I can make money within this channel even. It's a little harder. You got to be really laser focused to do it rather than a straight up or a straight down. But you can sit here and do this all day. Once you get enough experience, is it chaotic? Is it stressful? Yeah, it's more stressful. There's no doubt about it. Now see here, I'm up 137. Now, here's the other thing, if I can do this quick enough, I can use my stop to lock in my profits right there. See, now I move my stop. I'm guaranteed $50 out of this trade. So if this decides to pull back, which it probably will, right? Because now I'm at a triple top, I can lock in my trades. I can move this just about anywhere, right? If I move it there, no matter what happens, I guaranteed myself $112. Now I'm using my stop to lock into my profits. Yes, I can click right now and make $200, guaranteeing it myself, which is what I do. But if I'm letting this ride, maybe it'll break through this time, right? With hopium, if I want to risk it, right? I may make more money. But if this bounces here and pulls back all of a sudden, I'm at least guaranteed 112, right? That's more money I had before I entered the trade. Or like I do, I don't use my stop to lock in my profits. I look here, I watch this. 175 is more than 112, right? So I'm going to go that way, lock in at 162. So that quick. See, it's about what it'll do. Am I a fortune teller or what? Do I foresee the future? No. What did I say was going to happen? Probably when it got up to that triple top, that it would retrace, right? That would bounce off of it. Is it going to go back down all the way? Oh, that remains to be seen. But I know through my training and education and experience that I learned by being a paid member at AmericanDreamTrading.com that this is a normal statistical likelihood that it would do this. Now, another thing that you do learn from Coach is the more often and in a shorter time period that it keeps doing this, this is a pretty short time frame, right? It's not like it touched it here and then way hours ago it did the same thing. This is a pretty quick retest from here. Even though it retraced, it came right back up to test it again. It tried, but it didn't succeed. It pulled back. Now it's coming back up again. This is a very in relative terms, a quick retest. So the quicker that it retests a level, the more likelihood, not statistically, but there's a more likelihood that it will break through. Today might not be the day, right? Again, it's Friday's another thing you got to take into consideration. People getting out of trades. They may very well be trading the same thing. Well, that's a triple top. I'm going to take all my profit and sell it when it gets up there. That's what's happening right now. And the ones that know that was going to happen, they are now in shorts because they knew the statistical likelihood is that's going to reject off there. They bought it right here and they're running this candle down and they've taken their profits. They made money that way. You can do that all day long, folks. Key critical levels: double tops, triple bottoms, double bottoms, right? That you could make money just doing that one thing all day long, right? So that's the difference. It's the same trading stocks and stock options, though. If you know what you're doing, if you listen to the sound of Coach's voice, adopt what he's telling you, adopt his trading strategies, you will be able to take all those skills that you learn in trading stocks and stock options and walk right over here in the futures and be able to trade futures just as easily. Now, the lingo is different. Like you say, it's called a long instead of a call. It's called a short instead of a put. You get paid differently. There's no Greeks that you got to deal with that you do in stock options, but that can be a good thing in my opinion. Yes, you don't get the rapid acceleration in earnings like you do in a stock option, which is a distinct advantage over futures. But when it pulls back on you, all of a sudden your losses also accelerate, right? If you're on the wrong side of the trade. And I don't have to deal with any of that. To me, that is worthwhile. The other thing is I have instant settlement of my cash, right? Stock options and stocks, you got to wait till the next day on a cash account before you can use that money again. With futures, you don't have it. It's instant cash settlement. The minute I exit the trade, I can retrade that money again. I can do that all. I could literally trade the same money over 10,000 times a day if I want to. Wouldn't be wise, but technically, I can do that, and that money's instantly credited to my account instantly. So that's why you can make, you can trade candles out of it. We have members, and I do it occasionally. You see me do it. here on the live. Now I'm using a paper account to do it, but I do it in real life also. If the thing's climbing up, if I get a nice climb, I'll trade it as it goes up. I'll be in and out. Let's just use this as an example. Now I'm trying to tone that down a little bit because you get into a gambler's mentality, in and out, in and out. And you get into this rhythm and you're not paying attention to what's going on around you. I'm not looking at my L2. I'm not looking at this, that, and you can enter one click too many than you shouldn't have and lose money. But I may trade this 4, 5, 6 times just from this rise up here. If I see profit, I lock it in. I get in and get out, get in, get out. Now, what would be the wiser play would be to get in on my entry criteria and ride it up until the trade tells me to get out. And in this case, I would have entered. There's a slight break in and hold above here, and then I would have got in up here and rode this all the way on one trade. That's the ideal way of doing it. Okay, I only incur one set of um, transaction fees, which cut into your profit and loss. It's just part of the price of doing business. The smart thing is to trust your indicators and let the runners run, right? Well, Mark's got an itchy trigger finger, so when he sees green, I'm in and out. If I see this red candle and start to pull back, I'll lock in my profit because I got in here, right? And it goes up here. I see that red candle, I'm locking in my profit, and I'll re-enter here and write it up again. I do that all day long, and I'm trying to tone that down because what happens more often than not, I'll be in and out, 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 and I'll jump back in. And oh, what happened? I was blind to the fact there's a double top right here, and then I get into a trade going long and it pulls back dramatically like that and end up losing money. So you got to kind of use wisdom, right? You can't get too because you program your brain. You get that hit, bang, $100, bang, $200, bang, $150, bang, $300, bang, $100, bang, $50, and then you click one time too many, bang, you just lost $300, right? So you have to control your emotions. You have to control yourself, right? Because it can be detrimental to your trading. So don't do that. I'm working on that. We all have things that we have to work on in our trading and how we trade, whether it's education or our trading habits, right? So you have to be aware of those things so that, the fastest education that you can get is losing money and then trying to figure out why you lost that money. When there's pain involved, when you're taking money out of your bank account, you're taking food away from your baby's mouths. Now I can't buy food for my baby because I did something stupid, right? The financial pain is just as much you'll feel physical pain, right? Because you've lost a lot of money. How sick are you? We've all been there and done that, lost a lot of money on a trade because we did something that we knew we shouldn't have done. And we traded on hopium. Oh, I hope it goes up, right? I hope I make money. And clearly your chart was telling you don't enter this trade right now, wait. But you decided to do it anyway, thinking you're the world's greatest trader, and next thing you know, you've lost a large sum of money. If you have a significant other and that person asks you, well, how'd you do today? Lost $5,000. What do you think your significant other is going to react? How do you think, right? So we don't want to do that. So you do have to control thyself. You have to have discipline, right? Do I scalp? Over here, Mark in our live Zoom chat asked, do I scalp at the 2 minute? No, scalpers, I use the 1 minute. Do I scalp on the 2 minute by accident? Yeah, I do it all the time. I forget to change my time frame. But I do seem to do okay there too. Maybe it's less reactive, but the 1 minute gives you more reaction to what the candles are doing, right? There's twice as many of them. Yes, I scalp on the 1 minute. We have members that scalp on the 15 seconds, some that scalp on the 30 seconds. If you ever listen to Coach, he generally will do 1 minute. You'll see him once in a while do 30 seconds. I would say the larger the amount that you're trading, the less time you want on your chart, so it's more reactive, right? You'll see people that trade hundred thousands of dollars at one time, but they're going to want to get in and out as fast as possible. They tend to use a lower time frame. 1 minute is a nice compromise. It's not overly reactive, but yet it gives you the information need to know to get in and out of a trade. It's not as chaotic as watching a 30-second or a 15-second candle. There's a lot of moves up and down there. So 1 minute is what I scalp on, and I also use the 9 EMA as my main indicator, along with all the others. I'm still looking at the big picture, but I use the break and hold strategy that Coach teaches. That's my main investment strategy right now as a scalper. I wait for the break. Here's the break of the 9, this blue line here. I wait, let me blow this up a little bit so you can see it maybe a little bit better. I wait for the break above the 9 and the hold with the confirmation candle. That's my hold. Here's my confirmation candle before I would enter a trade. So technically, I would enter this trade here. Now, in real life, would I enter that trade? No. Why? Because I have the world's second strongest indicator right here. That's the 200 MA. Yes, there's 50. There's all kinds of trend lines you can have, but I use the VWAP and the 200, right? So this is the second strongest compared to VWAP. It's a longer trend, and it tends to respect those VWAP and it tends to respect the 200. You'll see if you look over here, look how it come up and bounced and rejected, or at least bounce and pause, right, before traders decide that they want whether they want to pay more, push it through. So people get scared and respect those levels. So what I had entered right here on this confirmation candle, in this case, no, I would not. I'm going to go give up this profit. Now that's a lot of money. I could have made money between here and there, but it may only went up part way. You don't know. People may not let it go all the way. They'll just take in a quick profit and before it actually touches the line. Now in this case, I would have been okay because it blew right through it. But as a general rule, no, it's going to pause. And you can see right back here, just look at all the time. Same way coming down. See here, come down on the down and it bounced off. It went back up, come back down. Here it blew through, come down off this level, came back. It was trapped between that and the 200. Look how many times it pounded its head up against that before it broke through, right? And the same thing here. So I know enough to be a little bit more conservative in my trading is treat this with respect as it was a strong level. I will actually go if I have my wits about me. I will wait till it actually, even though this is my confirmation candle to entry, is to respect that because it's very well statistically will pull back, and I'll wait for a break. Or here's your break above it, and there's my confirmation. So I would enter here. Now, would I lost a little bit of money in the process? Well, yeah, it would have pulled back on me, and I could have got out of it and re-entered and jumped back in and out, in and out, in and out. So stick to your trading criteria. If you're a 2-minute EWO player, which I firmly believe, even though I don't practice it myself any longer, is that 99.9987643, 2% of all traders should play Coach's 2-minute EWO strategy. And that is simply saying on a 2-minute chart with this strategy here, you would enter whenever the next bar is larger than the first bar whenever there's a color change, either the upside or the down. So here's my first color change from red to green. There is my, let me expand this out, make it magnify the effect here for you. This is the EWO, which stands for Elliott Wave Oscillator. Elliott is a real person, he's a mathematician type person. There's a mathematical formula that's only mathematicians can understand. I can't tell you what's all involved in making that work. But basically, his theory in trading and in the mathematical formula is that the stock market will go up, the stock market will go down, the stock market will go up, the stock market will go down, much like the waves in an ocean. And there's actually hundreds of different trading strategies even built off of Mr. Elliott's wave oscillator. So Coach employs his own that he developed over his 33 years of experience, the 2-minute EWO strategy. It's a slightly more conservative way of entering, right? So we wait for whenever the next bar is larger than the first one at the color change. So that would be, in this case, the second bar. Not all, it ain't always the second. It could be the third or fourth, but generally it will be. But you want to make sure that it is before you enter. So this would be my entry point here. This would tell me that I can enter this trade if the other things that I see on my chart that I've learned through training, education, and experience from Coach and being a member of AmericanDreamTrading.com taught me. As you can see, I would enter this in a heartbeat. I wouldn't even think twice. Why? Because there's my 9, there's my 21 and 55. Oh, where's VWAP? I got to know where those are. Oh, look, they're all. So I'm going in an upward trend, a green, and all my indicators are now in my rear view mirror. I would enter this trade. So what his strategy does is help you get a good entry. Now, could I enter it over here earlier? Yeah, I could have. I could have made a few extra bucks. But by waiting on this to decide and show its way it wants to go, there's a more likelihood. And again, even this is not guaranteed 100%, but more often than not, does work. So this is my entry. I get a good entry. So all this up here is pure profit, right? Because entry is the key to the trade. And then all I have to do, because I got here, I could sell out anytime I want. And you can look here and see how it's starting to roll downhill. See these dots? The hill got smaller. So, you might want to decide to get out. And you can learn to do that through your training. You'll learn how to decide to get out, when to get out. You know, in this case, and this is not always the case, I can clearly see that this double tops over here, triple top, right? Look at the strong resistance up here at this level. So what do you think the statistical likelihood, if it comes back up to this line, what do you think the statistical likelihood is going to happen? It's probably going to reject, right? I could probably go back over here in time and find the same thing happening over and over and over again. Now I'm on a 2-minute chart. It'd take a while to go back, but you get the point, right? I can go at a higher time frame, find it faster. So I know just by looking backwards that this will probably go. So I've already developed a plan before it even gets up here. But I'm going to sell out either here as it touches it or right before. And if it happens to blow through, then I'll consider re-entering the trade. And as you can see, it did that very thing. Came up to that triple top and retract. So I locked in 100% as much as I could of my profits. Then I can play to the downside, yada, 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 right? Matt, one of our paid members who has access to an open mic. What's your comment there, Matt?
How you doing, sir? Great
Good.
show. Great show. Hey, question, and I'm kind of mixed on this. I've always been back and forth on this. I'm always testing new things. With the stop loss, when you're buying in with the stop, I've been testing it today after today's earlier show and stuff, and I generally don't buy in with stops because I lose control of the trade. For example, I'm right now on ES. I'm right now currently at that top. I'm putting a stop in place now to take on a pullback. But what I noticed when I purchase with the stop, let's say 10 ticks, somehow let's say I buy in at the wrong time, it comes back, stops me out, give away $150 or whatever, and then it comes back to its original place, generally speaking.
Okay.
You personally, you don't use a stop personally, right?
Yes. On the indices, you should always use a stop, especially. What's coaches? Okay, no matter what we do as individuals, what is coach's rule?
You always use a stop.
There you go. So for those of you listening out there for free, we always use a stop. If I, as a member, or Matt, as a member, decide to break that rule, then if we lose money, whose fault is that? Mine or coach's? It's mine, right? Coach teaches us
Exactly.
always use a stop, right? Right? So again, to reaffirm, we always trade with a stop. Now, I don't believe your issue is not whether you use a stop or not. It's how tight you have your stop. I've been talking a lot today. If you get your stop too tight, then it can retrace and stop you out and then bounce off. So the question I have for you is, what's the average movement? On average, what is the movement on what you are trading? Again, it's a rhetorical question. So if you're trading ES, you need to know what is the average movement of one candle. Okay. So in this case, I can look down here in my chart. Right now, it's $4.50 or ticks, or no, dollars per candle. So let's just wrap up. We always boost up our ATR. So we'll say that's an ATR 5 instead of 4.5. How many ticks is $5, Matt, on ES? How many ticks, number one, is there in ES per point? 4, correct?
Correct.
So if I have a 5-point movement, how many ticks minimum should I have on my stop? It'd be 5 times $4, right? Right? You got, $5 ATR times 4 ticks in each of those dollars. At a minimum, I should have a 20 tick stop. So if yep, see, that's how we do that. If I'm using a 10 tick, that's obviously half of what I should have. Now, if a 20 tick stop is too expensive, you can't afford to lose that in any given trade, then We need to find something that's less volatile, that doesn't have as high of an ATR, right? So you have to be able to enter a trade knowing that it has a potential, in this case, to move $5 up or $5 down at any given moment, because that's the average. Now it can go more. That's why I use, when I'm trading the indices, I personally, and I'm not telling this is for you, but I personally use a 25 tick stop, right? So that gives me a lot of room to breathe. Now, let's say we adjust our ATR and that solves our problem. Have you done that? Have you tried that? Making a larger stop. Also, the second question, again, this is a rhetorical question. Where's the likelihood on a normal day in and day out basis that our candles are going to bounce and stop or reject off of? They're going to bounce and reject off of what? Historical levels, right? Price levels, which is, you can see how many times it bounced off of this one, right? Also, we have our indicators. We have our strong indicators that we make buying and selling. So at a minimum, and let's use this case here. We'll go with your 10 tick example. If this is my price, well, 10 ticks, you have it up here. That is way above this closest indicator, which could be a potential bounce point, right? The 9. It could come down here. Maybe the wick will just touch it, right? So number one, I'm disregarding a potential bounce point based on my indicator here. There's one here. I got a historical level here. I also have that indicator, which just so happens at this moment to be touching it. So you're getting a 2-banger there. I have another indicator here. So I have to, in my opinion, decide where do I want to move my stop to. Do I want to stick with my standard? And let me put a visual up here for you, because I do use generally a 25 tick stop, right? So right there's where I bought in. Here's a 25. Can I afford to lose $325? Maybe I can't. I don't. So maybe I shouldn't trade this. Or I compromise and tighten up my stop. Well, if I go 10 ticks, and you watch, it'll show you what it is as I move it up. There's 12. There's 10. Watch what's going to happen. Is that enough movement? Am I less? I'm half of what my ATR is. I have to give it that $3 to $5, whatever it happens to be at any given time. Or
Yeah, I
I'm going to
got you.
get stopped out every time. The smarter thing, in my opinion, would be use my indicators, use the known historical levels to set my stop. No, as you recall, the 25 ticks was about right here, right? So that's 27. Okay, so there's 25 ticks right there. Okay, maybe I don't want to risk $300 on this trade. Well, what other options do I have? I have my indicators. We know a lot of times it'll come down and hit the 9 and bounce, or if it happens to blow through that, it may come down and hit the 21 and bounce, or 55, and so on and so forth. If VWAP or the 200 is there, it'll tend to do that also. So is my 21 a good option? Well, it just so happens to be it's also right now at the level. I personally, if I'm tightening my stop up, I try to keep it just below, a hair below the 21, which would be below this level in this case, right? I mean, I could delete that line. Or I could put it just below. If I really want to push the levels, I can go just below the 9, keep it down below. That way, if it comes down and hits it and the wick breaks below it and bounces off, at least I'm still in the trade, right? You get, it's close. Let's watch. I have my thing there. Let's see if this one actually bounces off the trade. Yeah, I'm down 160 bucks now because I bought right here at the triple top, what did I say would happen up here? Statistically, it's going to reject. And look, it did, right? It's not that I'm some highly intelligent trader. I've learned this by being a member of American Dream Trade. And what do you see there on that screen, Matt? Can you people see this live at home? Let me
Yeah, we
blow
see
this
it.
all the way up. What do
Yep.
you see that candle did? Where did
Bounce off
it
the 9,
stop at? What did it bounce off of?
off the 9.
About that July, the double top.
Well, up here. But where did the pullback stop at? Right there on that 9, right on that indicator. So now that I left my stop below that slightly to give it a little bit of room, look, it bounced. I was down, what was I down? 100, 200 bucks. I gave it room to bounce off it. Now look at it. I was patient. Now I'm in it, right? I sat through all that. I could take my trade. Boom. I guarantee my profit. But I kept my stop, even though it wasn't 25 ticks. I don't know what that was. That was, probably a third less, right? It might only been 20 or 15, right? Well, here, I can figure it out. I'll tell you right now. It was right from here, right? I kept it from there to where I had it originally. So that was about 10 ticks. So that was like a 15 tick in that case. But I kept it below something that it may possibly bounce off, even though my stop was tighter than I really wanted it to be. And in this case, because the 21 and this line with my historical line were together, it really didn't make sense to put it right there, right? Well, it did in my case. I would have left it there, but because I didn't want to risk $300, I moved it slightly below the 9 in case this very thing that I said could happen happened. And as you can see, it happened. The wick went slightly, and I know it's hard to see on your screens at home, but it's just that wick just barely poked a hole through that line. But because I had my stop slightly below it, it didn't stop me out. And now look what happened. I'm back into profit again, right? Even though I was down a couple $100. And look at
That
that.
pull it's at hold on at 1341.15. That one was pretty brutal, but that still could have been controlled. And even if he didn't, I'm not saying, let's say with a super loose stop, let's say even a 50 tick, basically not even using a stop in that case.
Well, no, that's a lot of money. You better have a big
Yeah,
bank account,
but
right?
you could just write that back up if the trend is in your direction.
But again, and I'm not a big ATR person, but if you're trading something and you don't know what it is, you need to look at the ATR just so you can get an average of how much it moved. Now, I could have went up here and measured. I could have, well, it's up here, it's 56, 31, 25, and then it was down here and do the math and figure it out myself, right? But this little widget down here tells me what it is. You can put those indicators on your charts. But because you have to respect the average at least, that doesn't mean it can't go 30 tick drop on you, but that's not the average way that this is currently moving, is it? So I can't plan for a 30-point drop. I don't care where you have your stop out. That's going to take you out no matter what, right? But that's not the average, right? And all we can do is kind of play with averages and we pad it a little bit. So we knew at a minimum the ATR was, let's say, 5, and there's 4 ticks to a point. 4 times 5 is 20. So you should have no less than a 20 tick stop if you're going to trade the S&P 500. Why? Because the average that this candle will move up and down at any given time is 5 points, $5, how we think about it, right? As you can see, here's 20 on this candle here. What is this? This is at 28, 56.28. This candle at the top is 31. So 31 minus 28 is what? 3. There's a $3 average on that candle. I mean, I can go over here and look at all these. But the average, based on my little thing down here, is 4 plus. So right now it's 4. So why wouldn't you use those information to help you decide an average tick? Again, the main goal of a stop is to prevent a rapid pullback and get you, right? But you have to give it that breathing room. And if your stop is less than the average and you can't stomach that, well, then you need to find something that's less dangerous, if you want to say it that way. You know what I mean, right? So that's why I use a 25, right? See right there. So that right now with a 25 tick stop on one contract, I'm saying I'm willing to suffer a $300 loss on this one trade. Now, I can assure you that 80% of the people that are watching live right now cringe. There ain't no way I'd want to lose $300. Well, you could, though. I mean, as soon as I entered that trade, woof, it could have pulled back, right? You may have just clicked at the worst possible time all year to enter that trade, and a bunch of people come in and sold off. That's why you never enter a trade without a stop. Your initial stop is to protect you in case you made a bad decision or something goes against you right away. You can adjust it all you want once you get in there, but you still have to respect. So, okay, let's just say, I'm running my mouth. Well, you should have at least a 20 tick. Okay, well, I'll move it up 20 ticks to only 20 ticks. Right there it is. So now I only can lose 300, right? So maybe that's still too much. Well, then you got to decide where you want to put it. But the tighter you make this, the more often you're going to get stopped out in a losing trade because you didn't respect the average movement that it's going to do on that one candle. So, and generally what I employ once I enter a trade, I will move my stop, especially if it's like this, but I would enter down here. But if I'd really entered this trade profit, I'll put my stop just a hair below the 21. That's 27. That's pretty big. But as it moves up, then I'll start, if I want to, I'll start moving my stop up. Maybe I'll come up, and what I'll do is I'll look across. Where was these other candles? Well, they may pull back to these candles, right? See how all those are without having a line there. There's a line there, right? So I may just keep it a hair below that just in case it comes down to give it some room in case it wicks out. And as this marches upward and onward, if I want, I can start sliding my stop up, make it a little bit tighter. So even though there's nothing really here to decide, where would I put my stop? Well, look at these candles. They wick clear down here, so maybe I'll move it up to that. And as this goes up, I'll look and see. I'll go up to if this gets up 2 levels, I'll move it up to this level. And as it goes up another level, I'll move it up to the next level. And as it moves up, you can do that all day long. But if you don't respect the average price movement per candle, you're always going to get stopped out. Be an average, right? So you have to respect that. But, I can't tell you, Matt, you must set your stop at 25 ticks like I do, because your risk tolerance may be different than mine, right? So
Yeah, I haven't been using stop. I used to use stops religiously, and GC one time said, "Take off your training wheels, the sissy bar ribbons and stuff," and that really helped me a lot. And ever since then, yeah, I know more.
What does coach say it out loud so your brain hears it? What does
Yep.
coach teach about stops?
Always buy with a stop.
There you go. What does this, if I have a 25 tick stop on this trade, how does that affect my candles moving up and down? Not at all.
Correct.
All this is doing is protecting me from, if that drops 25 ticks and I let it go that far, well, that's on me, right? Just because you have a 25 tick stop doesn't mean you let it run down. I mean, you can sit here and I'm like, oh my gosh, I'm down $125. I don't want to lose anymore. So I'll click out of it and get out of the trade. I'm not going to let it pull all the way back down to that. But that protects me from somebody coming in and you get one of them whoosh, right? That's the whole purpose. And if you have that set too tight, you're going to get stopped out on a potentially good trade just because it moved on average up and down.
Well, I'm saying, like, if it whooshed down to, like, for example, the 21, for example, or it's somewhere in the between.
Okay.
Let's say you're at the 25, let's say underneath the 55, and then it stops you out, or hits that, stops you out, you lose your 300, whatever.
Yep.
Typically, if the trend's your friend and you can see it with the ribbon right there, it's most likely going to come back up. Well, you lost control of the sale or of the trade.
Mm-hmm.
Whereas if you did not in that particular case and you have control to stop yourself out, in other words, with not adding a stop, but just a sell, you would still be in the trade. If you stayed in the trade.
All right,
But
I
I have a year and a half of experience.
I'm not going to agree with your logic because if I have a 25 tick stop,
yep.
Well, we already showed it. From here to there is a 25 movement, right? You just see me put the order in and it was down here. Again, this is a stop here, right? I mean, it goes up. I have that indicator as a potential stop bounce point. As you can see, it's kind of respecting it. I have another potential bounce point here, and then I have my level here. So my 25 tick is not going to affect any of this. I can leave that sitting right there if I want, right? All day long and let it climb. At least I'm protected. There's no reason to enter a trade without having a sufficient stop to protect your downside. It does not have anything to do with your candle movements, but you have to take into account the ATR, the average movement of any individual candle. Again, we have no control over one that drops 50 ticks, right? That's a massive sell-off. That's billions of dollars when that happens, right? People don't understand how much money this represents in one candle. That's literally millions and millions of dollars gained or lost due to the volume in the market, right? Maybe hundreds of millions. But you must use a stop. So if you choose not to do that, we already know, and I'm the same way. Yes, Matt, I do trade without stops. When I'm doing quick scalps, in and out, and my fingers on the trigger, I do not use stops all the time. I don't. But that does not, it's not coach's fault if I lose money, right? That's all on my shoulders. But having
it's not his fault either way, but
right. But having a stop does have absolutely zero to do whether I make money on a trade or not. Having a proper stop set at its proper amount and proper distance away is what determines whether I have enough room there, wiggle room to allow it to do its average price movement. And if I tighten that up too much and I'm always getting stopped out, you need to reevaluate where am I placing your stop. It's not the stop's fault that you're getting stopped out for a loss and it takes back off. It's because you have your stop too tight and you're not giving it its normal what it wants to do every single day, right?
I think I'm finding out I'm more of a hyper scalper in a 15-second.
Well, that's
And so
fine.
it's kind of like additional things in my mind.
Right. But again,
Yeah,
I'm always going to
well said.
defend what coach teaches us, right? I mean,
Same
even
here.
though I do the same thing, I trade without a stop. I can't get mad at coach if I wreck my account because I didn't have a stop, right? That's all on me. But I do trade without stops when I'm scalping, but I'm not telling anybody to do that. It's all on me. If I don't trade without a stop, that doesn't affect Matt one bit. Who's it going to affect? Me, right? If I lose money on the trade. So, and I lose money on a trade with stops. So, but it protects my downside. You always want to protect your downside no matter what happens. The initial main reason of having a stop is to protect yourself against the sudden and dramatic pullbacks, right? Then you can tighten your stop up whatever you want as it goes up. But you still need to maintain that distance just because it's here now. It was a 25 ATR here. It's still a 25 ATR there. Technically, not really, but I still needed a 25 here, a 25 there, a 25 there, a 25 here, a 25 there, a 25 there. Just because it goes up or down doesn't change the average, technically. It does. I get it. But you know what I'm saying? So as this goes up, if I'm in a long and I want to tighten my stop up and move it up, move it up, move it up, and eventually you get above where you bought it. And now you're guaranteeing your profits by using your stop to lock against a sudden dramatic trade that wipes out all your profits, at least you're guaranteed a minimum amount, depending where your stop is. I still need to maintain and respect that candle is going to move $4 or $5 every candle. So I just can't just move it up there and be surprised when it pulls back $4 and I got my stop at a $3 level and I get stopped out. And I'm thinking, what the heck just happened there? Well, I didn't maintain that distance. So as it climbs, you have to keep the same ratio, right? Until you decide you want to really lock in your profits. You want to, and that's your decision to lock in the profits. But always, always, people use a stop. And that's probably it was my single greatest thing that I had to work against and learn is where do I set my stops because I was so used to stocks and stock options, right? Coach has a general rule 25 to 40%. Well, that's easy, right? Do the math, yada yada yada. And I was doing, and I use this example all the time, and I haven't said it probably for a long time, but when I was trading stock options, I started trading the Qs because I kept hearing members say, oh, the Qs are going, this is, and they were having success, and I never traded. So I started looking at it and learned how to trade it, and I was very successful trading the Qs, which is the NASDAQ. In this case, would be the NASDAQ, right? I traded the crap out of that nonstop. But when I first went in, I had a 25% stop. That's what coach says, right? 25 to 40%. Well, I was getting stopped out all the time. I'm like, well, all right, I need to fix that. Let me make my stop at 30. I moved my stop up to 30. That was my standard entry. It was a 30%, not ticks, but 30% to give it room to move. Kept getting stopped out. So I said, well, I not as much getting stopped out, but I'm still getting stopped out too much. So then I started going up in 1% increments. Got up 31, kept getting stopped 32, 33, 35. And eventually I was like, okay, well, I'll set this at 40. Well, guess what? I had very few trades that I was getting stopped out and losing money on. I mean, I would occasionally. You always lose money when you trade. But my periods of getting stopped out and doing the things that you're worried about, well, it pulls back and I get stopped out, then it goes straight back up, and I look at all the money I missed out on. Well, it's figuring out that sweet spot where to put your stop, right? And I found it for me, it was for that literally that 40%. Once I did that, my profits went through the roof, right? Did it pull back? I mean, it's very rare that something pulls back that far, but it does happen, right? So now I'm not telling you set a 40% stop on here over here, but I'm just saying in that case in stock options, I found the sweet spot for me, and the amount of times I got stopped out dropped dramatically, and it would come down and hit the indicators and all that and bounce up just like the frustration you're experiencing with getting stopped out, and then it takes off and goes back up. Those things went further. That was all by tweaking my stop, and I still traded with a stop. But yet my profits soared because I found that sweet spot. And that was probably the hardest thing to figure out when we first came over here and we were all green, learning how to trade futures. What is the sweet spot? And everyone's different, right? You're not going to use a 25. You may use a 25 tick stop on the indices, but you're not going to use that on gold. You don't need that much on gold, right? I use, I think, standard 15, but I still enter with a 25 and I adjust it. So that's just the little things that you learn as you go with education and experience and wisdom and playing around and adjusting, see what works for you. And again, if you find that, well, Mark said I should use a 25 tick stop when I'm trading indices. Well, that's not what I am saying, but that's how I do it. And if that's too much for you, and if moving your stop too tight and you're getting stopped out of it because you're afraid of losing, you can't lose more than X amount of dollars, well, you need to go find one of these futures that aren't as volatile, right? They have less up and down movements. The ATR is smaller. So anyway, beat that dead horse enough. Sorry. Ralph, got your hand up. Ralph.
Yeah. I know y'all was beating the dead horse, but I was trying to let you get finished. But I heard David talking about this today, right? And I always feel like if you're thinking about trading without a stop, just use an extremely wide stop. You know what? And then everybody, I heard Matt say it earlier. If you're gonna use a 50 tick stop, you might as well just not use a stop at all. It's a
Right.
big difference in a 50 tick stop and no stop at all. The difference between a 50 tick stop and no stop at all is all you can lose is 50 ticks. That's the difference. What if that thing drops 150 ticks?
Right.
And now you're sitting down there waiting for it to come back. So the stop is just there to protect you. You don't have to let the stop. You don't have to
Right.
get out with the stop. You can just exit out with the
Yeah.
trade. It's always best to protect yourself, right?
That's great.
And
Go ahead.
position size is king. I heard Coach mention this all the time, right? If you trading and you can't afford a 50 tick stop, because let's just be real, it moves 5 points. It used to move 3 and it moves a lot. You gotta give the trade room to breathe. And if the mini contract make you throw up because it moves down 50 stops, 50 go get 5 micros. You know what I'm saying? That cuts it in half right there. Go down. You gotta find what you're comfortable with trading because you have to give these trades room to breathe, especially now with the volatility that we're having.
And again, just because you have a 25 tick stop doesn't mean you have to let it go down there. You can exit the trade, especially in futures. The beauty of futures is I can get it out of a trade a million times a day if I want to. I can make 100,000 trades in one day if I wanted to, right? So why would I let it pull back 20 ticks on me, right? If I'm losing money, I just get out, rip the band-aid off. If it goes down 5 ticks, whatever number you want to dream up. Well, get out, take the loss, rip the band-aid off, get out, re-enter the trade when it's favorable to you, right? You can do that all day long. So there's no reason because you can re-enter a trade and your margin is instantly restored to your account that you can re-enter. So there's no reason to take watch it. Let's just say this here, right? If you were long, there's no reason to watch this evaporate your position, right? I can get out any time here and quit losing money. I don't have to wait for it to hit my stop, right? Especially on this stuff. Now you have no control over the giant knife drops, right? That's what that stop's for. But there's nothing that says that I need to sit here and watch me lose money. No, if I get one candle or two candles, or if it doesn't bounce where I think it should, then you get out and live to play another day. So anyhow, by the way, let me say once again that for all of those of you who are here today, you can get 25% off a futures membership just by watching today. You need to go to americandreamtrading.com, grab our free Discord first, then go to on americandreamtrading.com. You scroll down about halfway down the page, you'll see all that. There's a button you can click there that says basically to show me more, and that will list all of our membership packages on one nice page. We actually have a discounts going on our VIP Gold. We also have a discount, well, our all-inclusive package, and it ends today, I believe. I'm not 100% sure. We have what we call our diamond package. That is our all-inclusive, everything that we've ever created We give you 100% access to anything that's ever created. You have full lifetime pay, one-time access, everything we've all ever created, and anything that we will ever create or release in the future. And we do have a lot of things coming out here in the near future, new products and services, and you never ever pay again. It's $10,000, one payment, one time, lifetime, everything. And as an added bonus, it started yesterday, today for everybody that buys one of them diamond membership. Your name gets put on Coach's Wheel of Cash if you ever see him spin that. So if there's only 2 of you, then there's only going to be 2 names on that wheel. Each of you will have 50% of the wheel potential. Well, there's other things on there too. You can win up to $10,000 cash, which would pay for that membership, right? There's other prize points and things on there also, but you have whatever, higher percent, less people are on there. So you can go over to AmericanDreamTrading.com. Now, if you want a futures membership and do what we're doing and what we're talking about, we kind of deep dived and beat it to death, but maybe that's a good thing about using stops today, right? It's a very important principle, needs to be followed, and Coach emphasizes it. But if you want to get into the futures membership, well, we will give you 25% off today just because you're watching live during this live broadcast. If you go to AmericanDreamTrading.com, we will give you 25% off an annual membership, which gives you the whole year at 25. If you choose to pay by 6 months at increments, you would give you 25% off your first payment. Your next 6 months would be at the normal price. Same thing with quarterly. Your first quarterly payment would get 25% off. The other 3 quarters would be at the normal price. And if you want to do it monthly, you can get 25% off the monthly membership, and the remaining times would be at the regular price. To take advantage of that at checkout, you must go in and discount code box there. It's on the checkout page. You can't miss it. And type in the word Mark, M-A-R-K, Mark, like Mark McPhee. That be me, Mark McPhee. But just type in Mark, and when you click apply, you will see over there in your final page, it will instantly take off that 25%. Need to do that before this broadcast ends here at 4 p.m. roughly 26 minutes from now, right? So head on over AmericanDreamTrading.com, grab them memberships, change your life. All right, Doug, one of our moderators and paid members here, and one of our extremely well-versed moderators here in our futures, got a question, comment?
Actually, comment. Can you hear me okay? I'm in the car.
Yeah, kind of. Go ahead.
All right. To Matt's question, I just want to expound on that. And I would challenge his entry position. If you are struggling with getting stopped out and maybe not being patient enough to wait for the breathe back, this is the experience that I was talking about in chat. Understanding your ticker, whatever it is that you choose to trade, you need to live it. You need to breathe it, because every time a candle forms in ES, it will breathe back 1 to 2, maybe 3 times before it lurches or moves in the direction that it wants to. And these kinds of tips and tricks are going to be crucial if you have or going to run with tighter stops. If you're a momentum trader like Matt seems to be, you want to make sure that you allow that first candle formation to breathe back a little bit before you click to get enter, so that when it lurches forward, you have the opportunity to get out on a quick scalp faster than you would have to wait for it to do that if you got in late and then now it's breathing back in your negative, and now you're hoping it's going to come back your way.
Yep.
So I would challenge people that are struggling with stops, not only the distance, but also the
Entry.
fact that they're getting stopped out.
Yep. Yeah, entry is key to profits, right? That's a good point. Think about that. Good point. Yeah, that's true for everybody. We sound like we're picking on Matt, but Matt brings up a very important thing, right? And we all struggle with that. And I struggled with that when I came over here. What should I set my stop?
Yeah. He and I were talking about, I was sitting in Domino's the other night, trading on my phone. And he's like, are you using the L2? I'm like, no, I'm using the candles. He's like, what? I'm like, yeah, I'm just using the candles. I watch this thing implicitly enough to understand how the candles move as they form, so that when I see the breathe back a couple of times, I'm like, all right, now it's going to go. I get in, it goes 3 or 4 ticks, and I'm out. And there's my 50 or 100 or however many contracts I'm running at that time, as far as cash out. So entry. Look at your entries.
Yep. Good point. Let me go back up here through TikTok, read your comments, questions. Can I do a quick analysis on gold? Well, I can't give you investment. Nobody here at American Dream Trading are licensed financial advisors, and as such, we can never give you financial investment or tax advice. Gold right now is to the downside. If you're to the downside, you ought to be sitting nice and pretty. Let's see. Dylan over there says, I saw a guy sit in a trade for 3 hours because he forgot to put a stop loss and waited for it to come back. Yep, I've been there, done that. That's why you have a stop. I mentioned my indicators. I use the 9 to 21 to 55 VWAP and the 200 MA, and also the Elliott wave oscillator there. Over on, hey, look, Don was in and said hi. Hey, Don, our host over on our aftermarket show, which starts at 5 p.m. Eastern Time tonight and every night, over on our YouTube channel, American Dream Trading. Let me scroll back up above here to the YouTube chat, give them a little bit of love. How much money do you need to trade futures? Only enough to buy one contract of whatever it is. Depending on the broker, Webull requires $500 to open an account. You can go to their website and it will show you what is required in margin for each account, and that's what you need to trade one contract. Is the chart in dollars or ticks? And positions in dollars? Jambone asks. It's actually points is what they call it. I mean, let's just face it, we all think of this as dollars, right? Oh, look, I'm in a trade. I forgot. See what happens? This is why I don't trade with my real money. See, I switched off and forgot I was in this trade, right? That's why I don't trade with my real money. Bang. Yeah, we tend to think of it in dollars. It's technically called a point, but we think in dollars. But that's the value. Yes, that's not what it costs you to enter the trade because you're using leverage to buy into that. Do I need to memorize ticks and dollars for each contract? Well, our paid members actually have a handy dandy reference chart that they can look at real quick that we provide to them as a paid member. Or yes, you can memorize it, or you can look at if you have your trading widget will show you that information. You can go to your broker's website also to find that information. But if you're a paid member, we have it all one dandy little chart for you. Yes, dollars and ticks are confusing. It's actually points and ticks. But, I still call it dollars, even though it's called points. Ticks are a division of the dollar. If I give you 4 quarters, you have 4 quarters. Does that not equal a dollar? Yes, it does. There's 4 quarters in $1. 4 25-cent pieces in a dollar. ES itself is divided into 4 quarters. So there's 4 ticks. There's 1 quarter. There's 4 of those per point or per dollar. And you get paid X amount of dollars per that. You hand me a quarter. When it gets to that quarter, I will pay you X amount of dollars per tick that it moves. Gold is divided up into 10 cents, so there's 10 of them in a dollar. It pays for each tenth of it, so on and so forth. And once you start doing this for a while, you automatically will remember. It's not really that complicated. First time you hear it and try to learn it, it sounds complicated, but it's really not. It's like anything else. Once you do it, you'll learn it. D-Rock said a rough day, a lot of hesitations, made mistakes. Yep, that happens. D-Rock trusted his journal and paper trade. See what happens when you break coach's rules? You lose money. I already answered what indicators. Jambone says over there in the YouTube live, I always use to stop to protect my account. Good job, Jambone. I don't have to cancel the stop to get out in the options. I just cancel the stop before I close. Yeah, you can do that. There's different ways to exit trades. Over here on like with TradingView, when I hit this here, it automatically closes my position and my stops. And J&J, our own Don, who has the aftermarket show at 5 p.m. Eastern Time daily, Monday through Friday, over on our YouTube channel, says she loves our faces. Am I entering trades in the TradingView, Jambone? In TradingView that is connected to my Webull's futures account? I most certainly am. Now, this is paper trading, but I'm still getting the data from Webull. And yes, when I trade live, what I got to do is go over here because I'm in paper trading mode. I come up here, I got to log out of paper trading mode, and I come over here, click on here, Webull, and then I click connect. Now, I've already when you first do this here, here's some of the broker. Here's all the brokers that you can get. You can go to the tradingview.com's website and look. But they rank, these people rank the different brokers and stuff that's here. But you can go to their website. So when you first want to link your broker to it that's on this list, you click it and then you got to enter your password and all that stuff, right? Username, password. And then it keeps that on file. And then when I click connect, I click connect. Now I connect my real. Now it makes me even occasionally put my new password and everything in there also. So you have to do that. So, anywho, there's that. But I go back here to paper trading. It's already got my information, so I don't have to go through all that stuff again. So I'm getting real-time data from you. Yes, it is linked. All right. So now we're on the downside here. It's the last part of the day. By the way, we keep talking about coach's rules today, right? You've heard me talk about it many times since we've been here. Did you guys know that coach had rules, even though I keep telling you he does? Did my paid members know coach
Never
had
heard that
rules?
before.
What's that?
Coach's rules? What are those?
Oh,
Some of the rules. Okay, somebody, perfect question. You're asking the right questions. I like it already. I'm new here. What are the rules? That's what I'm talking about. So again, right, some of the most basic rules so I can help you guys. Think about this. Stop losses on each and every trade. What does that do? Keeps you from losing your accounts, right? Not hard. Paper trade only when you're a new trader. It makes sure you're not blowing up your accounts. You're not obviously ready for this. Am I right? Think about it. Every rule I have is not make money. It's keep your money. Don't trade in the first 3 minutes or the last 8 minutes of the day. It's the hardest time of the day. I've been doing this 33 years. It's very hard. I get chopped up all the time and I'm like, ooh, it looks good. Oh, it looks good. Oh, I'm going to do it again. Oh, stop. I'm doing it to protect you, right? If you're a new trader, don't trade in the first 30 minutes because it is the most volatile, right? Until we get the shift change when volume comes in again at 10 o'clock. Because why? The very beginning is like this. Yo, 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 yo. Typically, after the first 30 minutes, it will try to decide which way do I want to go today. I'm avoiding you getting wrecked, right? Last hour of the day is power hour, high volume, hedge fund managers making the things happen, trying to get markets to move the way that they want. I'm telling you to stay out of it. So if you're like, well, I keep getting burned up, why are you doing it? Right? Journal. It's for your own mental strength so that you can see what you are doing on a daily, consistent basis. That's all it is for. Did I trade it right or did I trade it wrong? What should I have done? What could I do better? That is what it's for, right? It's your homework every day. You guys can go back and review your trades and go over your journal and what should I have done right there and why did that not work out? It will help you, right? You're strengthening your brain and you're getting rid of your own stuff. Small position sizes. I say that because usually when you go in too large, your emotions take over. You're not trading robotically. You're not trading the trades. You'll end up blowing up your accounts, right? That's when we make a lot of mental mistakes. Is all the difference was we're going in too big. Let the runners run and stop out the losers. Again, notice the stop part is the most important. Stop out the losers so you don't continue to lose money. If you find yourself in these bleed out sessions, oh, well, I hope. Oh, it's going to come back. Oh, we'll see. Oh, it's coming down to support. Oh, it broke that support. Maybe this next, oh, stop. Draw a line in the sand. Use the stop. And then when you guys go green, right? Like, oh, I'm up 100. I'm taking that. That's my daily. That's what I told myself. That's what I told myself. If I can make 100, I'm going to take that. It could have turned into 2,000. Why are you taking 100? Let the runners run. I notice I never said take all the runners off the table. Never said that. I've never said that in my life. We use the shedding technique. We collect as it goes. We take off as it goes because that way we are guaranteeing locking in realized profits. Remember, nothing is realized until you actually click, right, the sell button. All these rules are in place, ladies and gentlemen. They're there to help you. If you can't do these very basic things we talk about, right, how are you going to advance? Stop saying woe is me. Stop saying I don't get it. Stop saying I'm not a good trader. I guess I'm never going to get it. Yeah, because you can't follow my basic rules. They're there for a reason. Again, follow the freaking rules, right? And listen, I know when I get on you guys, you know, I don't get to sell anything and I don't get to make any money. And it's just, I don't care. I need you guys to understand so that you guys can get ahead in life. This is what we're doing this for, right? So when I'm in this mode, right? And again, like, oh, I'm not listening to any of this. You need to listen to all this. This is where the secret sauce, this is the golden nuggets, not the coach, just call out that runner. That isn't going to do you any good, right? It doesn't matter. There's 8 million people in this room. We could call out stuff all day long. You could just hear us shouting stuff. That isn't going to help anybody. If you don't know what to do with it, what good does it matter if one is up or one is down? That means nothing to anybody if you don't know how to handle it. You might get lucky and catch a momentum, and you're like, oh, I'm a great trader, and you just keep getting out a million times. It's because it's been going in the same direction all damn day, right? Can you duplicate it? Can you recreate the process every day consistently? This is all about consistency, okay?
And there you go. There's coach's rules. What was one of them they mentioned that we were talking about earlier? Type it in your chat box. What was the one thing he said in there that we just got through discussing? What was that one rule? Just so you know, I wasn't being hard on another member. What was that one rule that he said not to break? Type it into your chat box. Type it in. Or no, our paid members know. What about the free members? Type it in there. See the first one can get that answer into your social media chat box. Yes, I didn't let my runners run Sub-Zero. I trade. Yes, Jambone got it. Number one, stops. Yes, Sub-Zero. Well, thank you for watching. Anyway, you remembered yesterday. Yes, I do jump in and out of trades continuously. Yes, it is better to let them run. You incur less transaction fees. But yes, I do jump in and out. I am a scalper, and that's how I operate. If I buy multiples, you should shed, but I don't operate that way. I'm a pure scalper, uh, and I am working on that. That is one of my things to let my runners run. I just have to work on that, be better. What it's doing is reducing my transaction fees, which increases my profit margin. But well, as I can say, what I'm doing right now is working for me. It's kind of hard to change it, right? Strapping money into my bank account every day. You know, it's kind of hard to change your ways. But yes, I do need to do that because that's that much more money that I would be putting into my account instead of incurring $3 here, $3 there, $3 there, and lost profits due to the transaction fees. If that you do that all year long, that's a lot of money, right? So I do need to do that. Again, you have 10 minutes left. If you use promo code MARK in the checkout box, you can get 25% off of your first payment for a futures membership today. If you're paying annually, of course, you would get the 25% off the annual membership. If you do it monthly, you get 25% off the monthly. Hey, if nothing else, you want to come in and kick the tires for 1 month and get 25% off of that, have at it. The first thing you should do, even if you don't want to buy a membership at this time, if you don't want to expand your knowledge and your training, you can join our free Discord. There's a lot of free training materials in there. You can also interact with other members that are in there currently and ask questions about trading, and you can discuss things and carry on just like we treat you, just like you're a paid member. We don't disrespect you because you're in there for free. We have quite a few free members. As a matter of fact, I think we had like 30 come in here recently today. I think maybe more than that. I forget. A bunch did. So you're welcome to come over and check us out for free, and I think you'll find you'll like our community. Matter of fact, I challenge you to go into our stock lounge as a free member and ask a specific question about trading. See how many seconds it takes for somebody to answer your question. Matter of fact, I'll go even one step further. I challenge you to go in there at 3 o'clock in the morning and ask a question and see how long it takes somebody to answer your question. We have unparalleled customer service that I would put up against any company in the world. We have some of the top moderators in here that their customer service is their thing, and man, I tell you, they're on it quick. I mean, right away, and they focus on that. And you don't ever hear them talk, but that's what they do. They're doing a lot of talking behind the scenes, and they're keeping this corporation running all the things that you need to do to keep an organization running. So I do thank everybody for being here. It is Option Friday. You can expect some more volatility here. I'm going to switch this back to a 1-minute chart, by the way. Can I take advantage of this buying and selling? Would I trade this in my real money in this environment? No, I would not. I don't do it. I mean, you see me do it here every day. And you're like, why aren't you trading? Looks like you're doing all right to me. Well, yeah, I do. But it's a little bit different story when it's your real money, right? Oops, I didn't log back in here. Hang on. Paper trading connected again. So, I can go right here. Let me reset my heck of things off a little bit here. Let me pull this up. Let me reset this here. I don't know where I'm at on it, but you can just paper trading, so you can reset it anytime I want to, right? So, now I'm in a paper trading mode. You can see what I'll make or lose right down here at the bottom if that little scroll ticker is not in your way. But I can come in here and I can enter and exit trades at will here, right? So what do I got up here? Oh, look, it's at its high of the day right here. What is that? That's just like drawing a line on my chart. What's going to happen at a high of the day? Do you think that won't be a point of resistance coming up, right? So now, if it's going to break through, it's going to have to retest it again. So what do you think? Because it's reached the high of the day, what do you think the likelihood of it going up further is, right? Well, we don't know. I'm not going to do anything because I have this strong support level here, which was our triple top resistance coming up. I still got to treat it the same with the same respect, no matter which way it goes. So I think this thing's going to shoot up. I personally think they're going to pull down, but you should have a form of bias. A bias, BIAS. Trade to trade that's in front of you. Trade your indicators. Trade your lines that you have on your chart. As you can see, I don't have any lines on my chart. Why is that? Well, we are currently at about 6,400. What is the high? Well, the 52-week high? Oh, the 52-week high is 61.66. So this is way above the 52-week high. That's why I don't have any lines there. I haven't traded at this level. So now I'm going to go in increments, and I'm actually going to watch my L2 here. Watch where these are at, see what's going to happen. Now this is extremely dangerous here. Number one, I'm at a high, New York high session, 52-week high right now, right? Did I look at that right? Yes. Yeah. The 52-week high was 6166.50. So as you 6-1, never mind. I'm not a 52-week high. What am I talking about? 6-1. We're only at 5-6. Never mind. Never mind. I was wrong. But it's at the session high, let's put it that way. Okay. New York high. So that without me having a line there, you can see I have an indicator that shows me the different. I have the New York, London, and Asian, which is the Tokyo markets on here strictly for futures trading. It just kind of shows me where it hit during those time periods. So I'm going to respect that for right now, right? Can I make some money to the downside here? Well, I can, right? I can go in here. There's my stop up there. I'll go in here. See that? I delayed clicking that button and ended up taking that for a loss because I was slow on the trigger. I was in the green there for a minute, right? Now, would I trade like this for real money? No, of course not. But I'm going to wait for a rejection off here. If it does, I'm going to try to grab it, right? I should have grabbed it up there when it was up there, and I missed my opportunity. If that pops back up there, I'm going to see if it rejects again. I might go short on it just to see if I can catch that top, right? For the rejection at the top, for it to come down, right? And maybe I can make a few bucks right here in the process as this pulls back, right? 0, 125 down, 250 down, 312 down, down 250. Oh, it's pushing to a new high. So this is not going to work out good, but I got to stop up there. I'm going to give it time. I think people are going to take profits, but you don't know that, right? They could drive this up more higher at the end of the day here. You got about 3.5 minutes left, right? Right now I'm down $500. If this don't pull back, I'm out. Do I want to go up that high? No, I don't actually. I want to tighten up my stop a little bit, seeing how it's the end of the day. No reason to throw all that money away, right? Even though it's fake money, right? So I'll put this up here a little bit, and if it stops me out, it stops me out, right? See if this pulls back. Would I sat in this losing this much money? No, I would have got out, ripped the band-aid off. I just wanted to tell you that I'm the world's greatest trader if this pulled back. Actually, it doesn't prove anything, does it? Right? So it actually did the opposite because I didn't trust. What was my trade criteria? Was what? Break and hold above new levels, and that new level was down here, which is where this candle's at. This is actually my break and hold to the upside, or a break and hold to the downside, which it didn't do that either, right? So this would have been where that was at, my decision point, and I broke my own criteria and paid the price. So that's why you have to stay laser focused and think out. Sometimes I say it out loud. Wait for the break and hold, dummy. Wait for the break and pull. Trader B, I'm going to kick you out of that TikTok room. You don't quit making fun of me. I know who Trader B is. One of our members. I'm not wearing a hat. I used to. I'll put some powder on my forehead for the blinding the next time. Darken your screen up. It'll overcome some of that. So anyway, you got about 2 minutes left to grab that 25% off the futures membership by going to AmericanDreamTrading.com. Tell them you came from the future live. That way we know how you found us, right? But anyway, I do thank you all for being here. We had a good week this week. The whole world was crying chicken little. The sky's falling. The world's coming to an end. Oh my gosh, look what's happening. I'm losing all my money. People are jumping out windows because their 401ks went down, and all the while we were making money over here at American Dream Trading. Why? Because Coach educates us on how to make money when the market's going up. He educates us on how to make money when the market's going down. And he educates us on how to make money when the market's going sideways. And we pretty much employed all three of those techniques this week because it did have that. We had the one day it was kind of choppy. We could have made money doing that too. So we don't care what the market's going to do. You hear people, when your friends, it's going to crash today. We don't care. I could care less which way the market's going today. I'm going to trade the trade that's in front of me with the skills and the techniques and the trading strategies that Coach teaches us every single day. And we will make money every single day. Doesn't mean I won't have red trades, right? I will, but I also have green trade. I have not had a red trade in, I don't know, minimum of 3 months, minimum. So I'm not bragging. I'm just saying that, that just shows what experience and time and education over time helps you to do. I don't take the big risk like I used to, right? So we're here 3 times a day, Monday through Friday. Coach is live from 9 to 11 a.m. daily Eastern Time. I'm live here with the Futures Education and Trading Program from 2 to 4 p.m. Eastern Time daily. And then we have our aftermarket show with Dawn over on our YouTube channel, American Dream Trading. She'll be there at 5 o'clock, an hour from now. Head on over there to our YouTube channel and stop in and say hi to Dawn and tell her how great Futures is. Rub it in. Tell her Futures is the best thing you've ever seen, and you don't know why anybody would want to trade stocks or stock options. Really rub it in. She likes the attention. And you could tell her Mark sent you. She likes that even better. Tell her Mark said to say hi. So if you want to go over there and say hi to Dawn tonight in the aftermarket show, have at it. I thank you all for being here. We'll be here at the same time, same bat channel next Monday. Make sure that everybody you come in contact with this weekend, you try to leave positive memories with those people. You never know who's going through what at any given time, no matter what face they show you. They may have a smile on their face, but inside they're dying. You may be that person that could change that attitude. So try to be a positive influence in somebody's life, whether it's family, friends, or even your enemies this weekend. I will see you next Monday, same time, same bat channel. Have a great weekend, everybody. See ya.